Okay. Hey guys, hello everyone. We should be on live from the trading room. As usual, happy to be with you every Tuesday from the 5ers YouTube channel. As you know, guys, I'm coming every Tuesday making analysis on the market, trading if there are some opportunities. And yeah, happy to be back as usual every Tuesday. My name is Ruben and I'm here with you today, guys. Let me know in the chat if the sound is good, if the video is good. Give some feedback and say where you're from, guys. Again, I prefer if there is an interaction with you. I don't like speaking alone during this hour. So if you have any questions, if you have any remarks, let me know in the chat and we will discuss. Need to remind, this is an open discussion. It's need to be interactive because any one of us, can bring their mindset and bring the vision in the market. Everyone must have a different vision. So yeah, let me know on the chat. Give me some feedback, guys. Regarding some movement today, we have actually the Euro USD that is pushing, Pound USD is pushing as well. No, Pound actually stopping the uptrend that we have. Here there might be also a technical reason for it. There might be an opportunity already that I might missed. But on the Euro, I think the trend is still going on. I will show you in a minute the chart and we can see if we can still have a spot for making any trades here. Perfect. We get some feedback. That's fine. I already know some people that coming usually. Hi, Insane, Armand. Hi, The Will, Emmanuel, Tom. Hi everyone. Thank you for responding. Yeah, let's dig directly into the chart. Let me just adjust this. Okay. This is basically the USD 15-minute chart, clear uptrend on the 15-minute chart. And again, I think it's also important to go back a little bit more and go to higher time frame. Basically, we have an uptrend here after probably an event, a news, market make here an overextended movement, as I intended all the time to check and find, and the market goes back. And here again, you see that this type of uptrend is very different than this one. Here, the margin of, let's say, the space that the market gives is much higher in this range, which is here we have, I don't know, maybe 60 pips ups and down approximately of movement, LC movement. And here we have it's 20 pips. It's very difficult to make any type of execution here. At least if you're a scalper, that can be good because you can find some good spot. The market is not volatile at all recently. And what is good also is that we probably have, for people that still following the Euro USD recently, an opportunity to make a buy here. When the market break a big supply area, for example here, goes back and make a retest, this also lead to a retest. Okay, so we come back, specific key zones, and then we move again here. I don't know what can be the next movement. Again, we are still in the middle of nowhere, so on the H4, if I go back to M15, it's very difficult. Maybe here we have a supply. Again, this is a supply that is starting to get consumed, and this is a middle supply. I don't know if I want to still build a position just right here, but I will be looking on it. In opposite, we have the pound, which I think respect well some of my mindset and my indicators. It's quite the same. You see, guys, we have this was probably the uptrend that was the same movement that we see in the Euro USD, and then again the uptrend here was a little bit let's say, lower in terms of difference and volatility doing these things. What is interesting in the pound is that we just reached again a top. For example, here the market just recently had let's say we test. If we go to the H1 chart, you see that the market reached the top of the H1 chart. So actually here we have a supply, we have a resistance that we can interact. If I look the stochastics, still it's above 80, starting to cross. Bollinger Band is still at the top. So there was actually here an opportunity to make a sell in the pound USD earlier. The market already starting to push down, so I don't know if I'm a bit late here to come in. But again, for people that respect this zone and sell the pound USD today, that's I think a good opportunity. Again, if I want to put aside the Euro USD, I will show you that is quite different. You see on the H1, the left side of the chart, we are only in the middle in this, let's say it's supply, middle supply, for example, instead of in the pound on the H1, which is an extreme supply. So here there is a higher chance the market to at least reject this zone, in opposite to the USD that we are in the middle. So again, it depends. I like switching between the pound and the euro to find any good spot I can have in the USD currency, because what I want to do something specifically recently is basically based on the dollar currency, which lead a lot of movement according to the macro environment and so on. Just something I would like to remind guys, for people that are new or people that would like to join more recently the trading room, any analysis or any trade that I would take or any explanation is not a trading advice, is only for educational purposes. I have my own trading strategy, my own trading style. I'm trading myself, so any things I will do is not an investment advice. Again, it's important to make a disclaimer. And yeah, you guys take your own decisions, make your own risk management, and we are good to go. Okay, let's look at the dollar CAD. Mark is here talking about the bonds that we had earlier. Oops, no, this is not what I want. Okay. Seems like okay. Okay, we still can have a spot here. Yeah, I think this was a nice spot to go in the dollar card. That's a nice spot actually. We see also here stochastics below 20. The momentum is finished on the downside. We are at the bottom of Bollinger Bands, and here the market just bounced, and actually people are still focusing on volatility in a period of time. So here already could exceed some part of the profit. Here you see most of the time a price come back to a specific zones, and more the orders are getting hit. So at the time this will break again, it's still provide here any good risk reward if you want to enter. Again, we need to be accurate, but again I need to wait that stochastic, for example, goes back below 20, because here we actually see that the market can continue and go back here, but actually the price can just break. Okay, so again there is no here any big zone for me to make a buy. As we can see on M30, we are still in the middle in stochastics. H1 is quite the same. H4 we might have a spot, but again this is a lagging indicator, so we need to be careful. And again, like I explained, most of the time you touch the zone, which is for me a clear demand zone here, and there is higher chance to break. So here I will be more careful by looking at it. Earlier, I agree that this was a great bounce because we are actually here losing momentum. If you had also RSI, which is a nice indicator, I believe that you could also see that the market was oversold. For example, here you see here from here to here there is at least no retracement on the upside, The retracement just happens a few hours earlier here. Again, need to be careful. So this is why I'm not all the time jumping into a position when I see all the type of signals I can have. Here is different because stochastics is quite in the middle, so I would prefer to wait. Interesting. We are starting to get some reject here on the Euro USD. We are still in the uptrend. This is clear, okay, but the market is still starting to react quite brutally. Again, if you go to lower time frame to this zone, so I would be looking later what's happening here. I believe that the pound is also moving down. Okay, let's look at gold. Meanwhile, you know, there are some good things in gold recently. Yeah, basically you only have this zone that is holding. I don't see anything else. Maybe we can have something more. Yeah, we might have this short trend on M30. You see also here, if I go to M5, this was your nice scalping to do for the day. Stochastics is above 80, starting to cross. We already had the reaction here. We are at the top of Bollinger Bands again. So this was a nice spot. Again, here the market goes back to the mean. This was a nice scalp to take, but I'm not I'm not in again. A bit late for making anything here on the H1. You see, guys, we are quite above the like this short trend. I see that starting to create. I think the market can, yeah, I think this is quite a strong zone here, basically because of this. See, this was, I don't know, maybe supply, market react, especially here, goes back, make a first retest, second retest, probably a third retest close to here, breakout, and then just like few minutes before, we just had a test in this zone. So this might be a good spot. I can find a sell here, starting to open some positions. Again, I will... The market already bounced down from here, but again, I still think that this is a big key zone on short time frame. Again, this is not the best spot because we are still in the middle, but this can be definitely be a good spot for me to start opening a position here. Again, I need to bold it. I will not go full volume right now. I'm still expecting the market can go back a little bit here, and then I will reinforce the positions. But I think here we have all indication. Stochastics crossing below above 80. We touched the top of Bollinger Bands. This is a big key zone on 30 minutes. So yeah, let's continue by doing that. Listen, Daniel, I think I have, and I trade like fundamental analysis as well. I was trading options, so I all the time needed to be aware of what's going on macro and kind of, let's say, in a macro economic world. When you look at the Forex, and gold is a bit different, but when you look at Forex pairs, for example, you cannot trade fundamentals on the short-term action. I think there is no sense to get, okay, we have a news, so maybe on M5 something will happen because of something. The market is too big to react for specific fundamental news in a short time frame. In opposite, I agree with you that if you want to position yourself in a swing trade, let's say you want to hold the positions for, I don't know, 1 week, 2 weeks, 1 month, you need to be careful about the fundamentals and need to understand what's going on in the specific country and in the specific economy, and why this currency can be stronger or can be weaker. So I agree with you, but when you look at the short-term price actions in Forex, there is a lot of technical aspect that we should take in consideration. Again, this is my mindset. This is how I view the market, and you know, you can have a different point of view, but talking about talking about specifically short-term price actions, I think fundamental have no effect. Okay. Again, if you look on the long term, this is something different. And also, like, because I think this is a nice discussion, a nice question to answer and to share the mindset. Even you want to position yourself because of a macro, because of a fundamentals event, you need to understand why you enter technically into the market at this specific amount of time. Okay, and the specific time. Sorry. Let's say, for example, you see here the Euro USD is slapping down, and you know, because there is of course a fundamental reasons about why between May 2021 until 22 say October 2022 the Euro USD slap down. There is a fundamental reason for it, and definitely you can open a sale, but you need to be careful and you need to enter your trades based on a technical analysis. I mean, so yeah, this is what I think. Again, I need, in my case, all the time when I want to position myself looking technically and looking at the technical aspect of the chart, I try to understand the volatility. I try to understand how the market is. Where is the mean? Try to get some data, try to know how the market react in the past, and then I execute. I need to understand, is the market oversold, overbuy, and then I execute my trades. But of course, when you look at the short term and M5, again, technically speaking, I think this will work enough. Do you use hedging to manage risk and position? No, I'm not using hedging at all. I think hedging is, let's say, is a fake strategy or a fake techniques to hold your trades. There is no sense to hedge because it will be like closing the positions, you know. Just close your position and open it again. I think it's quite the same. When you hedge your positions, basically you will pay more commissions and you will pay more spreads, and at the end it can be. It will be the same, like your equity will be the same, your P&L will be the same. I don't believe hedging in the Forex market, opening let's say if you buy one lot and then you want to hedge your position, so you sell one lot, you have no positions, your delta is zero, you have no position, so you can close it. I think it's the same. When we talk about hedging, it's important to understand in another point of view. When you trade options, you need to hedge your options portfolio in the market. So there is a sense by hedging your positions when you have an options portfolio. When you look at the Forex market and you only have direction positioning, you don't need to hedge your positions. You will see a lot of YouTube's video that explain how to hedge, why to hedge, what's the advantage. I don't think there is an advantage. Again, this is my own opinion. So no, I will not use any hedging to manage my risk here. Put a stop loss, put a take profit. If you're out, and that's it. No need to hedge. Let's see how the market will react here. What is your daily trading routine? That's a good question. Actually, I'm not trading every single day. I have my own routine at The5ers. I'm here managing all the trading desk, all our traders, checking the overall exposure of the pool. So I'm not myself actually today made my trade. Say I don't have a daily trading routine, but I had when I was trading options in a hedge fund, and basically, you know, I was all the time coming. I was trading commodities, so what is good in the commodity market, it's not all the time open. You have the London session, like the pre-market, which is very quiet, and then the market is starting to move and have some volatility when the US market's opening. So at least you have like few hours before the US market opens, when the market is quiet, and then you can, basically review your positions, create your plan for the specific day, be aware of what's going on outside. Let's say, when I mean outside, I mean in a fundamental aspect, and try to review the pricing and try to review the chart, and then be ready for the day. So what is good is all the time, don't come fresh into the chart and make an execution. Prepare your day by having a specific strategy, having a specific zone that you want to apply, or you want to do specific things in a specific moment, and then you will be like more ready when the market will open, and you will not have to think on the same moment. I mean, everything that you will need to do on the day will be written, will be in your head, and you will be only like the execution of what you explained to yourself like few hours before. So this is what was my daily trading routine when I was trading options and when I was full-time trader for 1 year and a half. Okay, how do you see Euro Australian? Okay, let's find if we have any good spot. Yeah, it's interesting also here. You see we have in quite a big key zone here. So weekly, I see only a sell. Looking at the weekly chart, I will not make a buy here, especially here. I'm not expecting a breakout at any moment of time. I will all the time trade in the opposite way. Here on the daily chart, we don't have enough movement, but I think it's starting to create. On H4, this is starting to create a base, which is interesting because we are in a big weekly zone, starting to create a base in this zone. Still, you see still that we have here an uptrend. But here the market is creating a base basically though. So yeah, making a sell here is definitely not bad, and we also see here we already some reaction. If you go to the 30-minute chart, this is quite a playground when you want to day trade or when you want to make some scalping. So you buy at the bottom and you sell at the top, and you are also in a weekly zone. So there is a lot of ups and down movement that you can respect. I think that's nice. Here right now, the specific time, nothing to do. The market just went down. We are exactly at the middle. See, so this is the top, this is the bottom, and we are close to the middle, which is the mean. So here nothing to do, but I would prefer to make a sell and basically manage my position on the downside. I should say I can take some profit when the market goes here, and if I want to hold it, because I think there is some reason to hold it, you have here a weekly zone, so you can hold a partial positions, partial volume. Yeah, Adam, I agree. This is the only advantage why you need to hedge your positions. There is nothing else, but it will not. I will not call it a hedge. I will only call it another positions. It will be. Let's say if you have, I don't know, if you have a buy on the Euro USD because I don't know, you make a buy on the H4 time frame. Okay, so you have a buy, I don't know, one lot buy. And then you want to scalp the same day and you want to sell here, I will not call it a hedge. Okay, you are not hedging your position. You are only creating another positions based on another signals or whatever it is. So technically, some people will call it a hedge because you hedge your long positions. But it's, for me, when I look at it, it will be another positions at all. And sometimes, you know, when you people sometimes they don't want to close the losing positions. I I have some let's say live examples when I have some traders. I know what they do because I'm here working, let's say responsible for all the risk, the 5ers, and I see some traders having a long trade losing. I mean they have lost already 200 pips, and they don't want to close the trade. They just hedge the positions. Okay, so what will happen here is that it's like closing the positions. You know, it's like just close your loss and that's it, and open an opposite trade if you want to be on the other side. You know, there is no sense to just hedge your positions because you don't want to cut the loss. Most of the time that people use hedge, let's say they use hedge, basically because of these reasons, because they don't want to close the losing trade. But if you looking about your example, which is, oh, okay, I mean, here I'm on a winning positions. I just see another, pullback, so I want to also take this trade on the same symbol. Of course, you can do that. It's a nice thing, but I would not call it a hedge. Let's see if we have any Forex factory news here today. We have CB consumer confidence. Don't think this will move a lot, the market. The USD. Thursday we have the GDP in US. Seems to be very important. Okay. Or do you deal with losing and winning trades? This is part of the overall strategy and overall system. Of course, you will lose some, you will win some, but at the end, what is important is you need to be profitable. Okay, so your winning need to be higher than your losing. I won't enter into details, but even you have 10% of winning trades, if the risk reward is 1 to 10 or 1 to 15, it will be profitable. In opposite, some people prefer to have a 90% winning rate, so you have only winning trades. But the 10% that they will lost, it will be a big loss. Okay, so it depends. Losing a trade will be part of the expense. It will be a part of the expense of your strategy. Basically, every business have expenses. Okay, I don't know any business that will work and will only make profits. You need to have some expenses because it's part of the system. So you need to react like it's an expense. Of course, there is sometimes some mistakes that you should not open this trade because it's not part of the strategy. This is business errors if we refer this explanation to a business. But basically, losing trades is an expenses. Nothing interesting. The Swiss yen is just dropping down. Yeah, not the type of spot I like as well here. We are in the middle. Maybe cut yen. Okay. Adam. So it's only have a psychological advantage. You know, you cannot manage your positions by using hedge. You just telling me this right now. You only tell, it's a psychological advantage, because basically if you open the same lot size in the opposite direction, it's like closing the trades. You know, like the position you have in the market is zero. So just close the positions. You know, if you think that the market will go on the other way. So it's only a psychological advantage, but talking about risk management and managing something, you are not managing anything. You are just closing your exposure. If you open another trade, let's say in the opposite way, but that will have like a different lot size, for example, that's okay, because you will let's say take a partial profit in an opposite way, maybe a scalp, whatever it is. But if you open in the opposite side, the same direction, just close the trade. It's the same, and you will like paying less commissions than opening a trade in the opposite way. If you think that it gives you enough advantage, like a big psychological advantage to do that, continue. But if it's not helping, I will just suggest you to close the trade, and that's it, because you will pay less spreads and less commissions. If you do this with a small lot size, like I don't know, 0.1 volume, okay, there is not a lot of commission that you will pay, and not a lot of spreads. But imagine you are managing a billions company, and you need to open 1,000 lots. 1,000 lots. The commission is $4, for example, in the 5ers. You will only pay $4,000 for the psychological effect that it will have. You know, so prefer to close the trades. So you can also make a close buy and this type of things, but most of the people I know, they don't use this type of management to close the trades. Again, this is my own mindset. I don't know if some people here have different different insight regarding hedging, but I don't like the idea of just opening a trade in the opposite side with the same volume. There is no sense, because the exposure you have in the market is just the opposite. It's just zero. You pay a lot of commission. Yeah, I know what I say, basically. You can try to close buy. I don't know if you know what is this, but if you have a trade in the opposite side, you can like right click here and make modify or delete, and then there is like close buy if you have an opposite trade in the opposite direction, and then it will reduce the commission that you will pay. But scaling out is better, yeah, of course. Yeah, so the market just opened 6 minutes ago in US. Just talking, but I'm not focusing in the market. Gold is just here pushing a little bit. I will wait to reinforce the positions. If not, I'm good to go. I want at least to reach the top of this zone, a little bit higher even. And what happening on the S&P? Market opens down. Okay, interesting. Looks like here you see that all the time we make a higher low, which is this is clear that here the market would like to push. There is a lot of indecisions. You see a lot of pin bar, so this makes sense. But here we are in the middle of the. You see, it's like we have the higher movement, lower movement, and here we are quite close to the mean. So I would prefer to wait a big drop and make a buy. I don't know, in this spot, for example. Here on M15 we can have also some reaction. The market just opened. We can make some scalp here basically. And again, not the best signal, as if we look at the H1 or H4 chart, we are quite in the middle. So market here can be volatile and can easily go to the stop loss if you set the stop loss below this zone. This zone was nice to respect, at least for the London session. You see that the market react one time here, second time here, quite here also close to the opening, and then here it's the US session. There is more volume, more liquidity. We can just break this zone. This type of zone is good only on pre-market, and here we see that it's quite react. We have here almost 0.8% push during the morning. I think this was yesterday during the London session. Yeah. Hedging is good if you use between a support and resistance. I think that's the same about what I said. It's just having no positions. Okay, so if you are between a support and a resistance and you don't know where it go, just close the position. Okay, for example, I think we see earlier it was the Euro Aussie, for example. For example, you have here support and resistance, okay, and you don't want to have a position here because you don't know where the market will go, and you are in a, I don't know, you are in a buy, you buy, and then you see support, resistance. Don't open a hedge. It will be the same to close the positions and reopening it after that this zone is finished. Maybe I'm missing something, but this is the same. I'm all the time looking at what is the exposure you have in the market. If it's zero, better to have zero positions. And I'm not talking here about rollover and expiration in options, for example. If you have open position at the expiry, it's complicated. You need to roll over your positions and so on. Here it's CFD. We trade CFD, so that you don't have these things. But basically, when you trade something, you don't want to. Your exposure is netting. When you trade derivatives, for example, you trade futures and options. If you buy one futures and then you sell one, it's like you have zero. Okay, it's like you have nothing. You will not see here sell and buy. Okay, so I don't know what's the advantage again of hedging in Forex. I don't understand. Maybe it's for specific things that I cannot explain because I don't know. But for me, there is no sense to hedge. Again, this is my own opinion. The news at the top of the hour might break the top before anything else happens. Yeah, I think we have a news. We have what we have. Let me check again. Consumer confidence in 30 minutes. I don't know if it's moved a lot the market. We might have some reactions, but again, I'm still comfortable by holding this one. We already crossed here a goal. I didn't reinforce the position here. I could actually. This was a nice spot to. See, we need to be very accurate. You see, here was again a good spot to enter the spot. Again, I would have preferred to wait for making a higher high and then again sell it. But I'm nice. And see, I have a comfortable volume to go with here. Again, I don't need to forget this zone that the market can react. So I will, of course, exit my position. I don't know, close to here maybe. Yeah, close to this zone. And here the S&P is not breaking below this line. Maybe they would are waiting the news that we have in 30 minutes. Don't know. It's not in 30 minutes, guys. It's on 20 minutes, something like that. Watch the video of Nick Sean. I will definitely see and try to understand, but I think I have again my own mindset. It can help psychologically some people to hedge your positions, but when you talk about exposure and what is the exposure you have in the market, basically it will be the same to close the positions. But I will look. Attila, thank you for giving me this. What type, how many pairs you trade, and what the assets are I prefer to trade. When I was trading options, I was only trading oil. Okay, I was not trading anything because you need to master in a specific asset. If you, I don't know, managing a portfolio, so that's different. You need to understand Forex, you need to understand commodities, you need to understand equities, you need to understand bonds. So if you look to an investment portfolio, this is different. But when you trade and when you day trade, the behavior of the asset will not be the same in a let's say oil will not move the same like gold. Okay, it's still commodities, but it's two different commodities first of all, and it will move very differently. And same, for example, euro, let's say Forex pairs. If you look at the euro USD, it will move very differently than the pound yen. So if you have a specific strategy, try to backtest it on different assets and try to find where you have the best performance and the best results. Again, if you manage it as a portfolio, overall portfolio, that's fine to know and trade all different assets. But if you want to master something specific, you can be very good by trading one symbol, and that's fine. I know very good traders at the 5ers that trade only pound dollar and are very, very profitable. I don't know if Yanis is here, but he's only trading pound, and he's a master. He's making a lot. I don't know. He's managing. He have a very good risk management first of all, and he's profitable on a very consistent basis, which is very important. So if you want to be, you don't need to be good in anything. Okay, when you're good at something, you cannot be good in football and in basketball and in handball and in volleyball, whatever it is. You're good at one thing, and here it's quite the same. You can be good at only one asset, and you can have perfect results. So yeah, I'm more of the school like mastering one thing will be better than doing good in multiple things. And of course, if you have one strategy that works, keep that strategy. Don't try to change and I want to have better and I want to change something. If it's working, continue until the market will change and will change the trend or will change the behavior, and then you need to think from the beginning. So yeah, I agree with you, Adam, Dina, I agree. Yeah, I think Adam, time will let you know. Only time will let you know. If you want to know if your strategy will be sustainable for the long term, you can backtest. Actually, what is good is that you are just only forward testing, so that's fine. But try to backtest also. It can give you some insight. Any thought on gold? Yeah, I have here a position on gold, which is a sell positions. On H4, say on H1, we had this this type of line that is holding maybe a support or an uptrend. I don't know if we can call it, but this is for me quite a base. Okay, I don't think here the market will go nowhere until we have another big news. On long term, okay, this is something different. On long term, it depends when, but I'm expecting the market to break the high. Again, I'm not a trader that like to break out. For example, I will never make a buy here. Okay, it would be a suicide for me. I will not make a buy in this zone for the long term. I already explained that that I made a buy for the long term on the 1,800. You see, we have here this big movement on the upside. I couldn't enter anywhere here because there was no retracement, and then the market just here retraced, and I found a spot here to make a buy, and then you can be in position, so that's fine. But here making a buy, the risk reward is not in your favor. Definitely not. So again, in the long term, I'm still expecting gold to break the new high. I don't know when, I don't know why for now, because there is nothing. There will be some fundamental reasons for gold making an higher high. Can be physical supply and demand. It can be a risk-off environment. We know that gold in the long, when there is a recessions and when people want to invest in a safe asset, they rush into gold. So there will be a macro, fundamental explanation to why gold will be breaking the high. So we're going to see a breakout. And I think there is nothing to have with the war between Russia and Ukraine. Here, this probably was a rush because there was a war and everyone was worried. But I think here it's quite different. There is a lot of banks that are getting collapsed. So there are still fundamental reasons to invest in gold for the long term. Okay guys, we are reaching the end of the session, so appreciate the time being with me until the end. I will still monitor the trades. I still did not put any stop loss, so I would try to calculate it right now. But in any way, thank you for staying with me. We had quite interesting discussion regarding hedging, which personally I don't believe this is a nice thing, but again, I will look some reference on the web, on internet, to find if there is a reason why hedging can be good in trading, especially Forex. Regarding other things, Euro USD was not volatile, very difficult to find any spot. Gold, we have a small positions. Life is continuing. Trading is moving. I don't know what I can say. But yeah, any opinion on Saudi Arabia and E1 affecting USD? That's a nice question. Basically, I actually don't have any opinion. I need to study a little bit more the subject. But if next Tuesday I will have an explanation, I will definitely give it. For me, Saudi Arabia and Iran just actually have a very big impact in oil. I didn't show you oil today and what's happening, but basically when there is something in Saudi Arabia and Iran, it's basically moved the oil. So thank you again for this interesting session. I appreciate the conversation. And yeah guys, enjoy your end of the day and see you next Tuesday. Goodbye guys, thank you very much.